Good morning, everyone, and happy Thanksgiving to everybody. We are live on YouTube, and one of our members, Steve, good to see you. Happy Thanksgiving. Yes, we're running the same program that we ran yesterday. It is a point and figure program on the NQ one mini, and it's been running since midnight. And that's what it's done. Yesterday, from midnight to 4, she did comfortably just under 4 grand, and she's having a pretty nice day today. And we are. Let's see, any other questions on YouTube? If you have, thank you, Steve. Again, happy Thanksgiving to everybody, YouTube and members. We're going to leave this up during the holiday here and give people a chance to see. Let's take a peek at Swing Machine, though. And so we have been asked, why aren't we trading this? And why are we trading? We trade a multitude of things, right? So we can trade Swing Machine, but we keep Swing Machine up, keeps a view on the markets. Just talking to one of our members, Chris, traded Nat Gas today. Huge trades, huge trades. Let's look at the VIX. The VIX goes short at 940. 940. That's an indication to our members that the market is likely to run. The 5-minute, 940, 575. The NQ, 940, 1550. The YM, 940, flat, basically down a little bit. The Russell, 955. How, you might ask? How does that happen? How does the S&P futures, S&P, NASDAQ, Dow, Russell, thousands of stocks, indices reflecting those stocks, how do they all move together like that, and why? Is it because everybody is on their bag phones on I-4, I-5, I-95, the Mass Pike, the New Jersey Pike, and they're all calling their broker today? Remember those days? You had your bag phone, and you'd call the guy at Merrill Lynch would charge you $200 to get in and out. I'd buy me some more of that apple. No. The markets were back then, and they are today. They're mechanized. They're machined. Of course they're machined. The only difference is today you can play. You can machine the markets. We have machined the markets. We've been doing this for 20 years. You couldn't do this before 2000. We didn't have the technology. We didn't have the speed. We didn't have the liquidity. We didn't have the commission structure. You just couldn't do it. Do you know that in the .com, you could not short stocks? You couldn't do it. You couldn't even short them. I mean, you had to go into options maybe, but you couldn't go to, I don't want to name any brokerages, but you couldn't do it. You could not short them. They wouldn't let you. And the commissions back then were like $200 in and out, $250. And when the first discount broker, it was a big deal. They were $35. So the playing field has been leveled. The question is, are you playing the game from like 20 years ago? Are you reading candles, moving averages, MACDs, and that garbage? It's not going to get it done. You're going to waste a lot of time, probably a lot of money. But I'm happy to answer any questions. Who are we? And I say we, it's my wife and I. Not from Wall Street. Nope. Spent 20 years in surgery with surgeons, working with the instruments of the day. Susan worked at IBM and Lotus Software. And in the early 2000s, we survived, did okay during the .com. We've always been involved in the markets, and said, isn't this ridiculous? Isn't this ridiculous, Susan? What a load of crap this is. And I said, do we want to take the wealth that we had at that time and give it another go, hand it over to some, I don't want to name companies, but you know who they are and who they were. Some of them aren't even around anymore. Do we want to do that? Or do we want to take control over our own destiny? For better or for worse. And there wasn't anybody encouraging us to do it. Everybody telling us, you can't do that. You can't do that. You can't time the markets. You can't do it. Nobody can do it. Nobody can time the markets. Oh my God, you hear them. They still say it today. These are the same, I don't want to be, the same a-holes, and they are a-holes, right? You know who they are. How about the CNBC guy, the guy from Canada? Oh yeah, you put your money with FTX. You expect them. Their guys' parents are lawyers and yada yada, and then people wake up and they've been blown up. Oh my God. Those people on CNBC, I will name them, the Contrarian News Bubble Channel, they're stock pimps. That's what they do. They pimp stocks. They're paid, their income is based on assets under management. I despise them. I despised them back then. We're not new to this. We haven't been doing this for like 60 days or for 6 months or for 6 years. We've been doing this for 20 years, 22 years now. I set out and, so I'm an older person, right? Who lived a lot of life, seen a lot of the market. There was some nice approaches from, 1981 to 2000. There were some, it was a different time. It was a different era. It's most certainly a different era today. It's not even the same as it was 5 years ago. This thing is evolving so much. And it is just, I just think it's interesting. I hope to you how we decided to do this. What happened was I said to my wife, Susan had stopped working at IBM and at Lotus, and I was still working for someone else. And by the way, we don't make specific recommendations to buy or sell a thing. Not a thing. Nope. So I'm not a broker. Nope. I'm not interested in managing anybody else's money. Nope. So we're not soliciting funds to manage. Nope. We are a mentoring site, but I'm not going to be, for you or for anyone else, drawing, trend lines and moving averages, and the MACD's doing this, and then we got a hammer candle, we got an inverted hammer, and then we got that and that and that and that. Oh God, I see that. I see it. I see it on the Twitter sphere. That's what they're all doing, from some kid that's been doing this for 6 months or something, and he got, Steve Neeson's big book on candles, and I have that book. That's not what we're doing. That's like, so old. And the hodlers holding on for dear life, hodl, YOLO, you only live once, YOLO. That's ridiculous. That is gambling. That is gambling. What I point to, how many times do you hear somebody get on CNBC? Especially during the holidays, right? It'll be the same people, and they'll come out and they'll say, I think the market has bottomed, and I think at the end of the year, I love the guy with the big black glasses, and I think the S&P is going to be at 5,000. And they give their prognostication for the end of the year, especially this time of the year. We're going to have a Santa Claus rally, and then it's going to be a January rally. It's always a rally, which maybe we do, right? But then they say something that, if you have your thinking cap on, and I suggest you do, think about it critically, is he'll say, or she, but of course, I can't tell you what the market's going to do tomorrow. Oh, okay. Now think about that. Think about that. They can tell you where the market's going to be 3 months from now, 6 months from now, 10 years from now. Oh, that's easy, because they're not going to be around. You're not going to remember, and no one will, like some of the other prognostications on FTX. But to tell you what it's going to do tomorrow, no, they can't do. Well, which do you think is more difficult? Go to the options market and buy a contract, an option, a call contract that expires in 5 days versus a contract that's going to expire in 5 months. Which one do you think is going to be more expensive? It's infinitely more difficult the further out you go. These folks that draw charts comparing the market to the 2000s or the markets to 1929, that is buffoonery. That is ridiculous. They're not the same markets. They're not the same stocks. They're not the same. It's not the same market. They have changed rules as we go. I don't want to bend everyone's ear, but I'm happy to. So what do we do? You might be saying, well, then what are you doing? What are you doing here? We are trading the here and now. The here and now. We're not trading yesterday's numbers. I'm not trading tomorrow's numbers. I'm trading right here, right now. And we understand how the game is played, not just in the futures markets, but in the stocks and in the options. You know, one of the tools, I don't want to change this view, and I kind of digress a little bit. One of the tools that we just made available for our members is something called the SMC, Stock Market Caddy, Expected Move. It comes from the options market itself. And it tells our members what the market is expected to move the next day, 5 days, 10 days, 15 days, 20 days, 30 days, 35, 45. I just got off the phone with one of our members. We maintain privacy. His name is Chris. And he said, you know, Don, you know what I did? Okay. And he could be listening right now. So I can't, and our other members know Chris. He said, Don, the other day, Tesla on a daily basis was in panic. And he knows what that means. It means that the likelihood when we're in panic on a daily basis, but you don't know this yet, but the likelihood that we move back toward the middle is 95%. So what did he do? While everyone else is selling Tesla at 168, he's thinking about going long, and he wants to leverage his money. He's not going to buy the shares. So what does he do? But and we're going to have a tool that is going to tell you. He goes into the options market. Now, a beginner might just simply buy the call or a call spread. Chris, like, no, I'm not going to do that. Why? The premiums were high, and we're going to have a tool that will specify. He didn't want to overpay. So what does he do? He sells a credit put spread. Why? Because the premiums were high. He wanted to collect that money. Tesla, as you know, I think she's trading now. She's bounced from 170. I think she's up to almost 180. He just closed it today. His return on that put credit spread was like 60%. And not to mention, he also traded nat gas today, a futures contract. Credit put spread on Tesla, few days, 60%. I'm not even going to tell you, I'm not, but you wouldn't believe it anyways. But what he did in nat gas. Chris is diversified in what he's capable of doing. He can trade futures, he can trade options. He understands. And he's worked extremely hard and put in a lot of time to learn. There's an old saying, I was reminded of this of Susan, Ben Franklin, says, an investment in education, more or less, an investment in education. I should get the quote exactly. But if you have any questions, don't hesitate. I'm going to go find that quote. If I'm going to quote Ben Franklin, I better get it right, right? It was a really good quote. But I'll go find it. But if you have any questions, this is your opportunity, and I'll let you watch And I'll point to what Swing Machine is doing. Now we can trade Swing Machine. An investment in knowledge pays the best interest. An investment in knowledge pays the best interest. Benjamin Franklin. The issue, I think, not everybody, but the issue a lot with the younger generation today, they know everything. They know everything. And they don't ask their parents a thing. And they don't ask their uncles anything or their grandparents. Why would they? They got each other. They got the internet. They got their circle of friends, and they know it all. Sure they do. They learned a valuable lesson from FTX. Maybe they did, maybe they didn't. They've gotten an ass whooping. They did not want to hear it. The Natalie Brunells of the world, following these false prophets. A sin to put any money into an exchange offshore. And it's a sin to put all your assets into any one thing long term. Anything can happen to anything. They could have hodled. They could have YOLO'd. But what was reckless was they didn't hedge. They didn't hedge. I can promise you this. That guy, Michael Saylor at MicroStrategy, they're hedging. What do they do that? How would they do that, Don? They buy Bitcoin, they go into a futures market, and they hedge it. They short it. Our Swing Machine went short on a daily basis on Bitcoin at about $40,000 a coin. Person could still have their Bitcoins valued at 15,000, and if they had hedged using futures, guess what? They'd still have value in their account. But, it is what it is. You need to learn. And if anybody thinks you can watch one video on the game of golf, you can watch one video and you can go to Top Golf. I'll go to Top Golf occasionally and get a basket of balls, and you see the kids there and they got their cocktails, and the girls are in their short dresses and the high heels, and they can hit the golf ball better than probably most of the guys there, and everybody's having a great time. Nothing wrong with that at all. Great. They can, they're just having a ball. It's very entertaining for them and everybody around. They're all having a great time. Please do not play in front of me on Sunday. Okay, and the machine just took a profit there. Please don't, right? They can hit, an occasional shot, but they have no golf game. Anybody can get into the market and pick off a trade here or there. Anybody can do that. What we want to be able to do is trade as a business and make, money consistently over time. That takes practice. At the same time, when I was talking to Chris about his nat gas, he's like, Don, I have been trading this nat gas for months. Yeah. And he has practice. But I'm happy to answer any questions. I digress a little bit. It is a wonderful game. Golf is a wonderful game. And it's multi-dimensional. Trading is a wonderful game too. But just because you can open up an account and just because you can fund it doesn't necessarily mean you have game out of the gate. Need to practice it, need to work at it. And in large part also need to know how to keep score. So many folks, don't really know how to keep score. They're keeping score on the money. And if you do that, you're basically trading subtly, unconsciously, you're trading greed and fear. And if you're playing golf out on the golf course and you get greedy or you are fearful, you won't be playing golf very long. A golfer knows not just his handicap and his score, but he knows how many greens he hits, how many fairways he hits, what his putting averages are. Why? So he knows what to work on from one week to the next. Do you know what your profit factor is? Do you know what a profit factor even is? I've had folks call and say they've been trading for 5 or 10 years and they've never even heard of a profit factor, or they don't know what it is. Like, well, what are you doing? Why are you doing this? Don't even know how to keep score, which is okay, but, need to learn. It'll tell you a lot about your own trading, what you need to do. When you see the program doing this, we're not showing anyone this to say that Swing Machine is an ATM and it's automatically, if you get this on your desktop, and it's automatically going to print you money. That's not what we're saying here at all. We're not presenting examples of the trading robots to suggest to you that they're going to automatically print money. I know that's what everyone wants. I know that, but that's why I'm bending over backwards to say that that's not what we're saying here. So we're not recommending or suggesting any stock or equity. I'm not recommending or suggesting that everybody should do this, because it does take time, it does take capital, it does take commitment. It takes a lot of things, and probably not everybody should be doing it, right? So I don't go there. And I also don't make any claims. It's why we don't sell any individual program. If you think about it, and this is what I said to Susie, I said, Susie, if we sell someone an individual program, with that will come an expectation. It would be, I would have an expectation. If I bought a program from someone, I'm going to have an expectation that it's going to do A, B, or C. It's going to presumably make me money. So we don't sell the programs. What we do is we have an annual lease, and we lease you all the programs, all of them, everything that I have. And then on top of it, which I think is even more valuable than programs, we spend 3+ weeks with a person who's in the Q school, instructing them on how and why we built what we did, and how and why they work the way they do. In the end, the person will be responsible. The mission statement around Stock Market Caddy is learn to play your game, not mine, not Susan's, not Chris's, but your own game. And I can't be holding, you can't play good golf. I used to say this to Susan. I was a little brutal maybe, but I said, Susie, she would say sometimes, I knew I should have done that. No, you told me this. I should have done that. And you told me that. Right? We went through that. Right? We survived all that. Right? And I would say, Susie, you need to learn to trade your own game. You get a set of golf clubs. What kind of golf would we play if I had a hand on the club and you had a hand on the club? We wouldn't play very well. I've had folks call me and say that they're subscribing to somebody. I had a person call me. They said they've been trading for about 3 or 4 years. I said, okay. And they were trading stocks and options. I said, okay. I said, how are you making your decisions? Well, I subscribe to this service, and every day they send me 10 or 15 option opportunities, calls and puts, and it's like, okay. And then I said, how do you decide? Well, I just pick a few every day. I said, okay. I said, how has that worked out for you? I basically, haven't made any money. Didn't lose any money, didn't make any money. All right. Been doing that for a few years. And then I said, have you learned anything? The gentleman was, honest enough. He said, no, not a thing. Not a thing. He goes, I don't know where the pics come from. I don't know. I haven't learned anything. So why would you do that? I don't know many people. Now I can't change this view right now because it's set up. But I will do this. If a person joins as a monthly member and it's month to month, you get a video view of all of our algos from Sunday to Thursday. That video can be on Sundays. It's no more than an hour. And on Sundays, it's usually about an hour. And the rest of the week, we try to keep them short, 15 to 30 minutes. We don't want to, and try to give you the pertinent information. What I wanted to say is, as a monthly member, if you say, Don, I've got a day that I'd like to schedule, we will invite you into our Zoom so you can see this not on YouTube, but on Zoom. Much better image. Latency is not delayed. And we're not expecting you to trade, but we will give you an orientation for about an hour of some of the tools. We'll show you real time, and you get a chance to see the rest of the day and see what our folks are doing. So we give you a view if somebody wants to do that. These robots, Intuitive Surgical. Some of you may have heard me describe this, but I need to, because it's important. If you are looking for something that doesn't exist, if you have an expectation of something that doesn't exist, on whatever that something is, not just in trading, but just in life, you're probably going to be disappointed, right? Just something doesn't exist and you're looking for it and you can't find something, you're going to be disappointed. There is no one program that will trade all markets on all time frames and just print money. There isn't. These trading robots are decision-making trading software. They're very good, but they will come in and out of favor as the market moves. They are tools, though. They are tools. So, if you go to Lowe's and buy a skill saw and take it home, at least for me, I cannot build a staircase. I'd probably be dangerous, right? I don't have master carpentry skills. So I can do some, well, actually I can't, I'm not very good with that skill saw at all, actually. I'm a little spooked by it. I just make sure I don't want to hurt myself. Intuitive Surgical, symbol ISRG. They produce $1 million plus surgical robot. I've had the pleasure of, not on a patient, but I've sat in the robot. You sit in it. It's like a cockpit. And the surgeon sits in it, and it's in the corner of the room. And there are all these instruments in the patient, all these activated trocars. It was built by the military. The idea was that it could do surgery out on the battlefield, and the surgeon could be behind in safe line, or it could be someplace in another part of the world. And that's been done, right? You could have a surgeon in Boston doing surgery on a patient in LA, highly specialized. The robot's got other additional features. It's three-dimensional. He gets a real good three-dimensional view. It's really phenomenal. The hospitals will build a special building for that robot. They will advertise that robot on your expressways. You'll see such and such hospital, robotic surgery, right? You must be a surgeon to operate that robot, at least on me or any of our, God forbid, our loved ones. Just because it's a robot doesn't mean that any Tom, Dick, or Harry can get in the robot and do, a prostatectomy. Not a good idea, or an open heart case. So you need to be a surgeon. Advanced planes, they have cruise controls. Does that mean you can fly a plane? I think I'm going to buy myself one of them Cessnas. I think we had somebody that did that off of Cape Cod one summer, right? He would have been better off. He would have been better off. JFK Jr. took off on a hazy summer afternoon from a small airport in New York. And he should have known better, because if you're from the Boston area or the islands during the summer, it develops that summertime haze. It's a scary thing. I can't imagine what they went through in that plane. But he had a pilot's license, but he didn't have all his instrument rating. And he flew off, and he got late start, and he got out over the ocean, and that haze blocked the coastline. It blocked the horizon. He couldn't tell up from down. That's you get a case of vertigo. And if you listen to these pilots, they say that the pilot begins to listen to his inner ear when he needs to be watching the instruments. If you are trading using your inner ear, or you are trading using the money, I'm up $300. I'm going to take that 300. I'm down 200. But I'm scared. I'm going to do it. You are going to be a wet noodle. You're playing into what Wall Street, and it's not just Wall Street, it's Madison Avenue. You're playing into your own fears. They're machined. Do you ever see on CNBC? Remember how Maria Bartiromo, years ago, went to the floor of the New York Stock Exchange? And they would have the post there, and people would be walking around. I still think they have that set there. It's a set. It's a facade. It isn't even there. There is nobody there. The NASDAQ is there. The NASDAQ has an exchange. Are there any people there? No. It's a big building in New Jersey stuffed with machines. It's machine trading. So why are you trying to interpret 5-minute candles? Why are you trying to track greed and fear, or the axe on the trading view, or the sales window, all this crap that's out there? Why track volume? I love these guys, volume, when something goes up on huge volume, something goes down on little volume. Oh my God. It doesn't have anything to do with price movement. There are so many markets to hide volume. We can trade the S&P in about 5 different ways. On the S&P, you can buy SPYs, SPY. You can buy calls on the SPX. You can buy S&P futures. I mean, there are so many different instruments. By the way, stay away from the double and triple ETFs. They're designed to fail. They're basically a configuration of futures. And if you want to trade that and get that leverage, why not just trade futures? Just, don't even mess with them. They don't track well. So I digress a little bit. I'm going to not be here all day by any means. I'm going to let you watch until about noon. And if you have any questions, but we just thought during the holidays, we give folks a chance to see a little bit what we're doing. And, but if you wanted to, when you join as a monthly member, you get a welcoming tutorial, you get a video view of the markets, and you get some insight as to what we're doing. And you will learn a lot. And then if you want to one day pass from there and see what's going on during the day, and nobody can join as an annual member. So I just want you to know this. I do this to protect you and me. And this has happened. We had a person well, we've had a couple. this is it played out a couple of different ways. We had one gentleman from Europe, and he sent us too much money, and he signed up as an annual, and we hadn't even had a chance to talk. And it turned out he didn't even really converse in English, but we just sent him money back. We just sent it right back. We did have another person though, God love him, and he is an annual member. Adam, I tell the story of Adam. He's a real person, upstate New York, and he called me on New Year's Day last year at about 3 p.m. And I tell the story, and Susan said, "Donnie, you're not going to answer that phone on New Year's Eve, are you?" I'm like, "Oh yeah." I said, "If this person wants to talk about the markets on New Year's Eve, I want to talk to him." And I did, and we really hit it off, and he was really passionate, and we were talking, and I was just explaining who we are, a little bit about this, and then we got to the end, and he says, "Oh, by the way, Don, I already signed up." I'm like, "What do you mean you already signed up?" "I already signed up. I signed up as a monthly. I signed up for the Q School. I already signed up for I just signed up. I know I want to do this." I'm like, "Oh, geez, Adam." you know, I didn't quite know what to do. I mean, I really liked him. I felt he was going to do really well. So I sent him, I said, "This is what we're going to do." And one of the concerns I had was his availability to trade. He had so much time constraints on his time. So I sent him a note, and I said, and I just said, if at the end of the Q School, I'd credit him back. His annual. So, we want it to be, the membership is set up so that it's incremental. We're trying to give everybody an opportunity to say, no, this isn't for me. So if you sign up as a monthly and you're not happy with what you're seeing and learning, then you're free to go. You didn't join for a year. You watch for a few months, and you're like, "Oh, I like this. Yeah, maybe I'd like to, spend a few weeks." So you got to spend a few weeks with me. Imagine that. Now, we don't talk at you, hopefully all day, every day. We don't, but we have on demand. And the Q School is a 3-week. It's a one-time purchase. It's one time, and it's 3 weeks. And at the end of that Q School, you'll have another decision to make. We hope you'll stay. We've had folks ask us, "Well, is it transferable? Meaning, can I take what I've learned and do elsewhere?" Yeah, you could. And I think you could take what we teach, and I think that you'll be in the top 1 or 2% over time of all other traders. I really, really do. But we hope that you'll stay as a monthly member, but we also hope you'll stay as an annual member. If you stay as an annual member, what we'll do is we'll credit you back $1,000 on your Q School purchase, and you become an annual member. And then at that point, nothing is refundable because we start sending you the files. We can't get them back. It takes us about a week. We will send them all to you. And at that point, an annual member would have to have TradeStation because they'll only work on TradeStation. So we try to give the person an idea as to who we are, what we're about, and then they get the files and with some direction, and then begin to work on their own game. We can't maintain the intensity of the Q School forever because we have too many people, and we're also trading ourselves. When the person's in Q School, their education takes priority over everyone else. Everyone else knows that, and even over our own trading. But after the Q School, and if they become an annual member, it's not like we disappear. Annual members can still patch into our live Zoom. And we've been using Zoom before Zoom was Zoom, which is another story, but because I didn't know it existed, I learned that from one of our members. And so we're there. But in the end, we can help around the edges, but everybody's got to play, from me to Susan. Susan has her computers in her office, and we set everybody out. We try to get everybody set up more or less the same, but then you're free to do what you want to do and play the markets you want to play. and play the intervals you want to play. We have members that use Swing Machine Plus and they have it set at 2 and 7 minutes. Some will play just at 3 minutes. They're trading stock, they're trading options. Some are trading just from Swing Machine. Some are trading Renko charts with programs that they're shadowing mechanically. Others are trading point and figure. Others are trading time charts, line break charts. We lay all that out to you up front when we think, and this has been, the way we think about this. Other places may teach you one thing or two things, and you go out and you try to do those one or two things, and it doesn't work, and maybe you go back to them and they say, well, then try this, and try that, try this, try that. We would rather lay it all out to you like a buffet table in advance so that you can see what the possibilities are, so that when you hit a little frustration, and you will, it's not possible to trade from peak to peak to peak. Can't do that. You will have drawdowns. But you know what's possible. So because the C word is so important, you want to have confidence. And we can't give folks confidence. We can give them knowledge. We can give them, but confidence is derived from, successful experience. And, it's just like everything else. That profit factor is so important, though. And if anyone wants to know and you're listening and you don't know what profit factor is and you want me to explain it, I will. So you let me know. Otherwise, I won't. But it's really, really important. It's everything, it's built around everything that we do. I can pull up that program has been running up there. And this can lead to another discussion. I'm happy to have it. But I'm going to share with you the details of this particular program that's running. And it has, oops, bear with me. I'm sorry. Went away on me. I'm going to pull up the trade manager analysis from TradeStation. We could not do we're just customers of TradeStation, but we could not do what we do from a trading standpoint without TradeStation. The tool is phenomenal. So this program has been running for the last 2 days. And it has, this is its total. Its total. It has made $4,288.60. Its profit factor is 3.21. It means that it has made $3.21 for every dollar it's lost. On the long side, the profit factor is 10.18. Market's been up to. On the short side, 0.69. The total number of trades over the last 2 days, 11. 11%. Profitable, 45%. This particular strategy is meant not to trade a lot. We have other strategies that are meant to trade a lot. Percent of time in the market, 82%. It's in the market a lot. And I'm happy to answer any other question, but we have dozens of these programs, dozens. And the possibilities are limitless, only limited by one's imagination. Now, we do a lot of back testing, a lot of forward testing, and which leads to another discussion. What happens in the past may or may not happen in the future. That's true. It's true. It's one of the few things that Wall Street says that is true. So what good is a back test? That's what I would ask. One of the other questions too, I I forget, but I would say to Susan, Susan, they tell us that you cannot time the markets, that we should not be selling, that it's a fool's game. We should just be buying the markets. This is in around 2000. I'm like, who the hell is selling every day? Ever ask yourself that? I mean, if you're not supposed to trade, who the hell's trading every day? Who's doing that? You know? So that was one of the things. It is true that what's happened yesterday is probably not going to happen today or ever again. The likelihood that that golf ball is going to land on exactly the same spot, on exactly the same hole, every single time from one day to the next is slim and none. It's not going to happen. Yet there are tons of people out there. It's a cottage industry teaching you that, oh, when the MACD is right here and it's at 0.22 and this one's at 0.33 and the moving average is sloping up and, my arm is twisted around my head and, all these contortions, right? All these contortions. And it works once, maybe even twice or three times, and then don't, ever again. What's that all about? Or even a back test. We can take back tests. We don't really show them. We can take back tests. Now we do in the Q school. We take pains to go into this. You can do something what is called curve fit. You can put so much criteria into a strategy and back test it and torture the data. And we hear from these folks, right, too. And I feel for them and I share it now. They've spent an inordinate amount of money, an inordinate amount of time in really not understanding, it's one of those things. If you don't know what you don't know, so it's not their fault. And they'll come up with a back test that is like, ridiculously good. Ridiculously good. And then sometimes it won't run at all. And they may run it for weeks on end and waste a lot of time, waste a lot of money. Sometimes I've even seen it where the program is actually really good and they run it for a day or two and it doesn't do well and they throw it away. That's even worse. They actually throw it away. Don't want to do that. So these back tests are valuable, but they're only a model. And the forward tests, TradeStation has a tool. Not many companies have it. I don't think any of the others do. I don't know. I don't want to mention them. But they have a tool where you can take this computer file of all these tests and plug it in and see what the probabilities are, the robustness of what it might do in the future. But then there's that thing in the back of our head saying, well, but it can't do it, in the past, right? That uncertainty, that's working today. It worked yesterday. What about tomorrow? What about next week? What about 2 weeks from now, 3 weeks from now? I don't know. I don't know. But what we do and what we teach our folks is to measure their performance against the back test and come up with something that we call efficiency. So, and I did that last night on the strategy. And the efficiency is like over 50%. Now, it's only been a couple of days on this particular strategy, but when you have a back test that shows you're going to make X amount of money, and if your efficiency as the sample size grows is like at 50%, maybe that's acceptable, maybe it isn't. And I got news for our members. If we continue with this efficiency on this particular program, it's going to be a beautiful, beautiful addition to our stable of strategies. So I hope I've given you some insight as to who we are, how we got here, how we look at this, how we approach it, what we're doing. I hope so. And at the same time, I'm happy to answer any question. All I wanted, as I said to Susan, was to have our independence. I was tired of the lying, folks. I did not like what I saw during the dot-com, right? And we survived that. I did okay. Actually, my history, it's my history. Started in 81. I tell the story. We owned stock before we owned furniture. I did VectorVest, I did IBD, and I did extremely well. Extremely well. It got to be 97, 98. I knew it to be a bubble. I wanted to start shorting and I couldn't. I couldn't do it. You couldn't do it. So I started cashing. And then I thought my career was flourishing. And I thought, boy, I gotta get myself a pro. Oh man, worst mistake. I went to a guy, I won't say, I went to a guy, big building, former military pilot, had the planes on the walls, had a view of Tampa Bay. He was, a VP of VPs. And oh my God. Well, he was an unmitigated disaster. And fortunately, probably took a lot of trips, he and his wife, on my dime. I finally said to Susie, I said, Jesus, I got to fire this SOB. I fired him. Thank God. So we felt a little bit of pain. So, and then it was after the 2000s said, that isn't going to happen again. I'm not doing that. Rush Limbaugh, I have a friend. He works for actually a hedge fund. He works actually out of New York. He lives here in Florida, believe it or not. He flies back and forth. And he had the opportunity to meet Rush Limbaugh. And it was kind of an interesting, and he told the story, and he said, Rush asked what he did. And he told him, and, Rush made a comment to him, a couple of things that I remember the conversation that was relayed to me. I wasn't there for it, but he said that, why would I put my money that I've been very successful at earning with someone else that doesn't have nearly what I have? That was Rush to this, young fellow that worked for the hedge fund. Pretty interesting. I kind of share that view. Or I share it a lot. Why would I do that? The other thing, Rush, which I digress a little bit, he asked me, he says, do you know what I do? And the kid says, yeah. He goes, but I got to tell you, I don't really listen to talk radio. And Rush said, no, do you know what I do? He goes, well, yeah, you've got a radio show and it's syndicated and it's all over the country. And Rush came back at him again. I said, no, I'm asking you, do you know what I do? So I was a big fan of Rush. I liked listening to him at the time. The guy was like, he was sweating bullets. Like, what the hell is he talking about? I don't know. He goes, I guess I don't. He goes, I presume you kind of wanted some of my business. You really got to know and understand what somebody does. I sell advertising. That was Rush. He goes, I sell advertising. I'm a salesman. That was Rush. That trade is still going. Program's doing pretty well. And I'm happy to answer any question, folks. We only got 5 minutes together. We love what we do. When we set out in 2000, I set out to teach Susan, maybe I didn't finish the story, but I set out to teach her everything we knew and to get, Susan hadn't been trading, and to get it so that she could manage this part of our life. I took a 6-month sabbatical and I never went back to what I was doing. I loved what I was doing, but I just never went back. Susie set up her office and then I set up mine. We've had a wonderful, wonderful life. And, knock on wood, it's been beautiful. It got to be about 2010 before Twitter Sphere. We were watching a movie. It was Bag of Ants. There's that scene in Bag of Ants where the golfer bends over and he starts trembling and shaking. And he's like, I knew what he was. If you've seen that scene, it's like he wants to run. He doesn't want to hit a golf ball. He doesn't want to do it anymore. He's had enough. He's crumbling. and you can hear the drums, the war drums in the background, if you've seen that scene. And I stopped the movie and I said to Susie, it really was impactful to me. It made an impact because I wanted to quit many times, many times, many times. I can't, if I told you the amount of time that we spent, the amount of money that we spent, you wouldn't believe. Susan wasn't having it. She's like, you're not quitting. We're not quitting. And now this wasn't in 2010. We had already worked through what we had to work through, but it was not easy. And it took a time. And so my point was to Susie when we were watching the movie, I said, I wonder, Susan, if there are people out there like us that would like to learn what we know. And that was the kernel. And I had a little piece of napkin and I started to scratch out the idea. And she said, and so I started during the movie. I didn't talk to Susan. I scratched this thing out in Stock Market Caddy and then what it would be. So when the next day we talked about it, and Susan just said, Don, you can do this. And because the way we trade is pretty boring, right? It's robotic, it's mechanical. And she said, you can do it with one proviso, two provisos. One, it doesn't take away from our trading and it doesn't hurt us, that you can maintain your focus. And not only has it not hurt us, it has helped us, because when you're teaching someone something, they come at it with different perspectives, great educations, great experiences, and they ask things that you don't think of. So we've grown a lot from everybody. So it's wonderful that way. And then the second piece was that it needed to operate in the black. We weren't, and so that's what we did. And we tried to structure it again that is, fair to folks and gives them a chance. And we have had some wonderful experiences, and we've had some folks just come in and just do phenomenal, even better than us. It isn't a zero-sum game. Their success doesn't take away from mine, just doesn't. When Chris calls today and says, usually we're talking about profit factors, we had not just Chris, we had a gentleman call from one of our members. He's in Germany. He was a little euphoric. He was a little euphoric. This goes back a little ways ago, and he said, Don, yeah, his name is David. He goes, I had a profit factor of 8, and I thought he said 8. I'm like, okay. And he goes, no, 80, not for a day, for a week, 80. So if you know what a profit factor is, you can work it backwards. Now, I didn't need to ask him. I didn't need to know. I don't need to know. But if he lost $100, means he made $8,000. If he lost $1,000, it means he made 80 grand. He was pretty high. He was a little bit high. And I had to caution. I said, okay, you may not do 80 every week, and then the next week when we talked, it's like, oh man, I only did 15, and then even fall back to earth. I only did 3, but it can fluctuate, and it's how we keep score, and it's how we know. So with that, it is high noon. Talked a lot, kind of went all over the place. You notice I wasn't drawing any trend lines. I wasn't even, mapping out any trades. I was just telling you a little bit about who I am, who we are, how we approach this, why we did what we did, how we went about doing it, and what we offer. And if it interests you, you're welcome to call. I come at it, and I truly mean this. And I say that I will arm wrestle every person for the right to say that I am the most ignorant person in this market. I can't tell you why the Russell is going down right now. I can't tell you, I don't want to know, right? Why is Tesla going up or something going down? That's the rational side of your brain trying to work. I need to be like a shortstop. I need to be able to go left. I need to be able to go right. If I have a bias, too much of a bias anyways, or preconceived notion or a preconceived forecast, I may not react. I need to be able to react. We also, and there are 4 ways to trade. Trend follow long, trend follow short, counter trend, counter trend. That's it. Only 4. And then there are 4 styles of trading. 4 styles. Do you know what they are? 1 is discretionary trading. 99% of everybody trades discretionary. They live and they die there. It's a shame. It is important that you have good discretionary trading skills. It is important. And we can help you there. We'll in time get to know what you are doing, and we won't radically change that. We'll try to enhance it because you do need to have those skills. But what we try to do is move a person from trading discretionary to what we call mechanical. From mechanical to robotic, from robotic to robotic hedging. In essence, you'll become your own hedge fund, your own, not maybe soliciting funds or anything, but you'll be running your own hedge fund. Why, and it's a lot of folks that's, kind of a strange concept because they've been accustomed to, I buy Tesla, it goes up, I sell Tesla. Why would I hedge, right? Option traders understand that because they hedge all the time with their spreads and so forth. But that's kind of who we are, what we're about, what we try to do. If you've learned and found it a little bit interesting, imagine, not 8 hours a day, but for 3-4 weeks, we'll really get to know each other. And our members know me. They know my style. A lot of times I'm a little early on some things. And we're pretty, we're curious. I think it's good. We're curious. And we're pretty, and I'm passionate about this. I love doing this. And it's just my nature though anyways. So you should know, when I play golf, that's all I'm thinking about. There's the golf. That's all I'm thinking about. And when I'm fly fishing, that's all I'm thinking about. I'm very, very focused on whatever it is I'm doing in the here and now. When you can live in that space, difficult to do, but when you can live in that space where you're not thinking about yesterday, you're not thinking about tomorrow, and you can just focus right here, right now, it's almost meditative. It's actually relaxing. It's crazy, but I actually find trading to be relaxing. I've actually measured my blood pressure. It goes down. It really truly does. I don't have a TV in the office. I have a treadmill. I'm not tethered. I don't have carpal tunnel. My hand's not fitted on the mouse. And we're focused. You're focused on the green number up on the left. We focus on the volatility in the account. We're trying to keep that volatility. We want volatility in the market, but we don't want volatility in our account. We do that, by hedging and by using machinery. And I'll also leave you with this one last thing. You cannot triangulate this market or any market. Cannot be done unless you're Citadel and you get the orders in advance. You get tomorrow's newspaper today. Yes, then they can triangulate and chew everybody up, I suppose. But that's not the case with futures. Why can't you triangulate? I draw this comparison from what I read. I wasn't a sailor. We have a member that was a sailor. If you've read some books and you read about when they used to sail across the oceans, they didn't have a GPS. They would have something called a sextant that I would read about. Never used one, but from what I understand, they would plot where they were, the boat. They would hold the sextant, and plot the horizon. And then they would capture, a star, a constellation, a fixed point, and they could triangulate and map where they were going, where they are, and where they want to go, and time, and so forth. You cannot triangulate the market. Why? It's not fixed. The stars they're fixed. The horizon, it's fixed. The market isn't fixed. It's not a fixed point, so we can't triangulate. Then what the hell are we doing? What are we doing? So if the market is not the stars, I would say the market is more like the waves on the ocean. Do you ever watch the show Deadliest Catch? You get those boat captains. They drive the boats, collect the crab. Looks pretty simple, but they're pretty good at what they do. And they got to position their boat so it doesn't get broadsided. And they're constantly adjusting. And they're mapping. And they're driving that boat. The market is more like the surface of the ocean. And we're using technology and more and more and more. We're doing some incredible things. We have some incredible things that we want to develop. Real time, making real time adjustments and mapping it out and trading it out. Won't be perfect, but it will be hopefully good enough. We can stop at any time. We're going to keep running this. We're going to shut down YouTube here in a moment. I'm sorry, but we could, if we closed right here and stopped the program, would be to the good today since midnight, another, $3,700 for today's session. But I hope that makes sense. Enjoyed it. Thanks for stopping by. Have a great Thanksgiving. Give it some thought. Give thought to what you're doing. And firm believer in you bring about what you think about. If you think you can't do something, you probably won't. Don't even try. Just don't. Mind is incredibly powerful. Ridiculously so. It really is. And but positive thinking alone won't get something done. You need to have some time. You need to have some risk capital. You need to have some discipline. You need to have patience. And you do not need to be tethered to the machine. You do not need to be there all day. I refer to the gentleman, Chris. I don't know if Chris is here. It is kind of a game with him. He'll sometimes say, Don, I had a profit factor of whatever, and I was only in the market 9% of the time. It's pretty hard to get hit when you're only in the game 9%. You don't have to play all 18 holes every day. You can go out and play just 3 or 4 and quit while you're ahead. It's a huge advantage. These guys, they can't do that. They got to worry about, their billions over Thanksgiving, and that's why the futures will open on Thanksgiving night. They'll be open. They can't have that risk. Now, they won't be there working. They'll have the kids doing it, the interns. So we're going to wish everyone a good Thanksgiving. I think the markets are open the rest of the day. They'll be open a partial on Friday, and you're more than welcome to call anytime. Members, thank you. You listen, they hear all this. Hopefully they turn down their mic. They've heard it all 100 times. But it's for me, it's fun, and it's my baby. It's our baby. It's our baby. So we like showing the baby. It's what we do. So we enjoy it. Have a great Thanksgiving.